Hey traders, it's John Fortune here with this week's weekly Forex forecast. Hope everybody's having a great weekend. Next week, we have 3 interest rate decisions and we also have non-farm payrolls plus Jerome Powell testifying on monetary policy next week. So it's going to be a big week for a number of currencies in the Forex markets, and we really need to be paying attention to those upcoming news events in order to create a coherent trading plan and watch list heading into next week. So quick look at the economic calendar. You can see on Tuesday we have the interest rate decision out of Australia that we need to pay attention to. We also have Chairman Powell testifying. And if we scroll further down, you can see we also have an interest rate decision out of Canada on Wednesday. And we have the BOJ and an interest rate decision on Friday. And also on Friday, we have non-farm payrolls. And in the middle of all this, we have Jerome Powell testifying, as you can see, at the semi-annual monetary policy report. This is before the Senate Banking Committee. So what do I expect from this? Well, actually, the dollar is neutral going into next week, as we're going to see. However, we have seen strong data out of the US recently, and really since the last meeting when Powell kind of took a bit of a victory lap. So going into next week, I would be very careful with dollar shorts around these events. Why? Because there's a very good chance that Powell comes out a bit more hawkish than expected. And I do really favor silver, gold, and possibly even Bitcoin as trades next week over and above the actual currencies with the dollar in them. Okay, so let's have a look at the scores for the coming week. And last week, we can see that the scorecards were projecting choppy markets, ranging markets, a lack of opportunity, because it's when we get currencies above 2 or below 2 that the scorecards are projecting a decent edge that we can start to go in and put the odds on our side. When we have nothing above 2 or nothing below 2, or you can see the currencies are really failing to provide substantial edge to the up or downside, then markets are generally choppy. They can be good for range trading. However, last week lacked so much volatility that it was even difficult to range trade them. Markets barely moved. As an example, the dollar yesterday closed pretty much the same place it closed on Monday. So the whole week we basically went nowhere in the dollar, and that's why markets in general as well, they really barely moved. Same with the S&P 500, not much movement last week, just chopped about. Coming into this week, you can see the slight dilemma we have, because the euro is projected as the best long. It's telling us we have edge to start to go long in euros. And to the downside, the second currency pair where we really have some decent edge is the Canadian dollar. So we would be looking at EurCad, which we're going to look at for sure. EurUsd, because we have edge to be long, and this is the second weakest. Even though this is not below 2, this is still weak relative to the others. And the yen. So Euro-yen, EurUsd, EurCad I'll be interested in looking at. Could also look at Euro-franc, which is equally kind of bearish to neutral to the yen and the Aussie. And also, we can look at pound-CAD, pound-Aussie, pound-yen, pound-franc, and maybe some of the dollar pairs as well. You can look at dollar to the long side. The problem here, and this is where I was talking about this dilemma, is we have these different events coming up next week which can change markets, move them around. So you look at the euro, and the euro is affected by what happens in the dollar because it makes up 57% of the dollar index. So if you go long euros and Powell comes out hawkish when he testifies, then you could see the euro selling off, and therefore that makes this long play not as good as it would normally be without that kind of event coming up, without that risk event. And if we look at the Canadian dollar, a market here which would be a fantastic short, but we have an interest rate decision, so the Canadian dollar itself is unlikely to do anything until Wednesday and then start to move. So you can see the slight dilemma we have. We've got an Australian interest rate decision on Tuesday, so this is unlikely to do anything till Tuesday and then move based on what happens. And then the Japanese yen on Friday, we may find the Japanese yen barely moves at all week. Although I will be interested in looking at euro yen, pound yen to the upside to see if we can get some trades before the BOJ on Friday and then be out of them. But as you can see, just to summarize here, the difficulty is that we have risk event with the Canadian dollar, the Australian dollar, the yen, and also the euro and the dollar because of Powell speaking next week. So it is a week full of risk event, but there is a plan that I have in place to look to play next week. Okay, so let's have a look at the individual currencies before moving on to the markets themselves, the watch list that I'm looking at next week here. And I want to look at these on the monthly chart because this is important. And this is something that I've been covering with members for a while. You can see the major breakout level here. Look at this monthly reversal in the dollar. And the reason why last week was such a low volatility week is because when you get a new month starting like this, very often the first week or so, you can see a little bit of a correction consolidation as it paints the lower wick. And that's literally all we saw last week. So anything we were looking at last week in terms of dollar strength, I do still favor dollar strength. Just because we kind of consolidated a bit doesn't mean we're not going to continue higher for the rest of the month. But I think it needs that catalyst, and what that catalyst is Jerome Powell looking at the previous data coming out of the US, which has been hot, which has been much better than expected and exacerbating inflation, and Powell coming out and basically being more hawkish, maybe even talking about a 50 basis points hike at the next meeting. And that would be the catalyst to send the dollar higher. At the moment, it's just currently consolidating. Next is the euro. Now look at the euro, and this actually paints an even better picture because you can see we pulled back, we closed the month back down below the major breakout level, and all we did last week was we pulled back and we retested this level in the monthly candle, and I would be looking for this follow through to the downside. Again, could very well come on Jerome Powell's speech next week, and I do think at some point, whether it's next week or the next meeting, Powell is going to have to get more hawkish to address the stronger than expected data that has been coming out of the US recently. Next is the pound. The pound also, if you look at this on the monthly chart, we just kind of closed inside here. And again, I would be looking for further declines, treating this just as a big bear flag essentially in the monthly, back down to the lows. But patience required on this. And at the moment, you can see this is just consolidating for the last 1, 2, 3 months. But I am looking further downside this month in the pound as well. Next is the Swiss franc. Huge outside month in the Swiss franc. This engulfing candle, and it's pulled back and retested the previous high up here. In the scorecards, this market is actually kind of neutral. In fact, it's even bearish to neutral in the scorecards. And the Swiss franc technically is actually right at an area where it can go either way. However, going into next week, I would favor Swiss franc shorts next week. Next is the Japanese yen. We have Kuroda's last meeting on Friday, and it's very unlikely that Kuroda, in my opinion, is going to raise the yield curve control cap any higher than 0.5%. I think that's the job of the next governor. And so I think we're going to see continued bond buying out of Japan. And this is fundamentally bearish, but also you can see a really nice sell-off in the monthly. So I would not be surprised to see further declines in the yen this month. I am looking for that. Again, last week, merely just a minor pullback for a new monthly candle. Next is the CAD. Again, another really strong monthly candle to the downside, and it does look like we're going to continue this bear flag, which I've been highlighting on the weekly chart, down to the lows, and actually even down to this low. There's no reason why we can't break down below here because this is just a continuation of the trend. So I do see further declines in the Canadian dollar, but we have that interest rate decision. So looking really for the CAD to do nothing between Monday and Wednesday. And then when the interest rate decision takes place, looking in that direction. And preferably to the downside is my preferred direction of travel after the press conference. So we get the press conference coming out and we get the Canadian dollar selling off. Then we have the catalyst in the direction of the overall market here. Australian dollar, another massive outside reversal month. And again, we're just simply pulling back, and this just looks like a minor consolidation. So I do favor Aussie shorts, and especially vis-a-vis the euro and the pound, because even if we get risk off and we get stocks selling off, which we covered last week, yes, stocks didn't do anything last week, they moved sideways, but the risk is still to the downside, then you're going to see EurAusd benefiting to the upside, Pound Aussie benefiting to the upside, EurCad benefiting to the upside, Pound CAD benefiting to the upside. So pretty much the inverse of what we looked at in the dollar. It looks like the Aussie is starting to make its way back down towards the lows, and I would not be surprised to see this starting to sell off over the coming weeks. And last but not least, the New Zealand dollar. It's kind of neutral in the scorecards, but another market here with a major outside engulfing candle. And this was a market I was highlighting to you as we were pushing higher in this area, that this was way too extended based on the fundamentals. You know, we had this kind of rally when we had that major stimulus post-COVID, and we were actually involved in a rally here which was kind of starting to compete with this in terms of strength, and there was just the opposite in terms of fundamentals. We've got maximum tightening out of the US, and over here we had basically maximum stimulus. So there was pretty much no chance that this was going to continue much higher because the fundamentals weren't there. This was actually a mispricing. And we have sold off last month, and now I am looking further declines back down to the lows over here for the rest of the year, starting from this month. But as it currently stands, just a minor consolidation, but look out for the risks to the downside. Okay, so let's look at the markets themselves and the watch list that I have going into next week. And starting with crude oil, do crude oil every single week, but crude oil is really neutral in the commodity scorecards. I don't have a strong bias on this, and in fact, in previous videos, it's just been chopping around. But if you are looking to trade crude oil, I would favor long positions. We started to break with momentum at the end of the week, and any pullback, I'd be looking up to these highs over here, roughly at the 83 area. Now, as always, it doesn't have to come to the green area over here, but this is my max profit taking area. Once we trade into this, we start to have the odds turn against us, and this is where you can see the market reverse. Next is euro dollar. Now, in the scorecards, euro dollar is actually a neutral currency. Why? Because the euro is strong and the dollar is also in the strong side. So if anything, I'd be looking to range trade this. However, based on the principle of being more reactive to the events next week as opposed to being predictive and on the wrong side of them, we're going to be looking at euro dollar and also US dollar yen, New Zealand dollar to the opposite direction to euro dollar. So if we get Powell coming out and he fails to be hawkish, then I would be looking for potential long opportunities in the euro, and I'd be looking up to roughly the 1.0760 area. So the next two dollar pairs are what I have on my watch list. If Jerome Powell comes out and he starts, as I believe to be the case, starts to be more hawkish. I favor yen shorts and New Zealand shorts because neither of these have a risk event next week, unlike the Australian dollar and the Canadian dollar. So in the event Powell comes out hawkish, and I wouldn't be surprised to see this, well, the Japanese yen does have risk event, but it's all the way out on Friday. So these markets can move before that event takes place. If we get the US dollar versus the yen correcting, and then you see Powell coming out more hawkish, this would be, and again, this is what my base case is, I would favor these two over euro dollar. If we see that, this would be the opportunity to start to look for longs up to the 138 level. And the final dollar pair here is New Zealand dollar. Of course, we do have silver and gold, and I really do like silver out of those. But in the Forex markets here, this is the final dollar pair that I'd be looking at, and it is based on dollar strength. So again, Powell coming out and being hawkish when he speaks next week. If we see New Zealand dollar pulling back, preferably even testing the highs, and then we see Powell coming out and being more hawkish, this would be opportunity to look for shorts down to the 0.6120 area. Next is euro franc. Now these two are highlighted in gold because we do not have risk event for the euro, the pound, or the franc, although they are indirectly linked to that risk event with Powell speaking because of the global reserve status of the dollar. However, out of all of these are the two markets that really sidestep that risk event more than the others. So in terms of euro franc, this is one that I'd be looking to the upside. We've had a nice sell-off, and so this is a great opportunity to start to look for long setups in this market. And if we pull up to test the highs, this is where I'd be looking at a max short-term profit-taking opportunity. Above here, we start to run the risk of a reversal. Next is pound franc, another bull flag setup here. You can see we've consolidated and pulled back and corrected. So any continued consolidation is viewed as an opportunity for potential double bottom or an opportunity to look for long setups. And again, back to the previous high would be a great opportunity for booking profits. Why? Because above this previous high in this area, we start to run the risk of running out of steam here and reversing. Okay, so the next pairs are the Aussie pairs. And because I favor Aussie shorts based on the current scorecard data, I'm going to be looking for Euro Aussie and Pound Aussie first and foremost. But if we get Australian dollar strength, then I will be looking at Aussie franc as a plan B. And in fact, as you can see here, that pretty much is going to be the same for the Canadian dollar and the Japanese yen. Because what we have here is 2 Australian dollar shorts, 2 Canadian dollar shorts, and then 2 yen shorts versus the strongest currencies. And then essentially as a counterweight or as a plan B, if we get a stronger Australian dollar, or we get a stronger Canadian dollar from the interest rate decision, or later on in the week we get a stronger yen, then the opportunity to go long one of those post the interest rate decision would be against the Swiss franc in all 3 of these cases. So starting with EurAusd, any correction or consolidation, I expect this market to do nothing into Tuesday. And then what I would like to see is a break higher. I'm going to be looking for long opportunities into the 1.5900 area. Pound Aussie, another really nice bull flag setup and looking for a rally into the previous highs. Any consolidation is viewed as an opportunity coming into Tuesday to look for long positions. And if we get Australian dollar weakness and we get that breakout, look for a pullback and a follow-through trade for the rest of the week into the highs, into the 1.800 area. And the final Aussie pair is Aussie Franc. So I'm going to wait for Tuesday. And if this market just consolidates into Tuesday, as I expect it will, and then instead of Aussie dollar weakness, we get a rally to the upside, that's the opportunity if you want to play this in the opposite direction, again, being reactive. So you get a stronger Aussie dollar. You're not looking to trade Euro Pound or Pound Aussie. You're looking to trade Aussie Franc. You look for that bull flag and then looking into these previous highs over here, roughly at the 0.6400 area. Next is EurCad. Again, preferring EurCad and PoundCad because these are Canadian short plays. Any continued pullback, and then on Wednesday, because this market, these CAD pairs are likely to do nothing into Wednesday, and then we get an explosive move higher, look for the pullback and the follow through into the previous high and also up towards the 1.4600 area. Next is PoundCad. Any consolidation into Wednesday, look for this market to do nothing. But then if we get a rally in the pound versus the Canadian dollar, so that would be the Canadian dollar selling off on the interest rate decision on Wednesday, look for this rally higher, and any pullback would be viewed as an opportunity to look for a follow through into the previous high, roughly at the 1.65250. And the plan B setup here for the Canadian pairs for the interest rate decision would be CAD Franc. So any pullback in this market, if this market just consolidates and then we rally to the upside, why? Because we get a stronger CAD off of the interest rate decision. Look for the pullback and look for the follow through into the 0.6960 area. And the final pairs here are the yen pairs. Now the Japanese yen doesn't have an interest rate decision until Friday. So there's a good chance you could actually see these alongside the franc pairs moving before the interest rate decision takes place. So any pullback in this market, I do like this for potential long opportunities into the 146.50, especially as I do not expect Kuroda to change his stance on the last meeting that he has. I don't think he's going to undo all the work he's done just at the last meeting. I think he's going to go out with the same policy as he's had previously. And as I said earlier, it will be up to the new governor to actually implement new policy. And of course, the current Kuroda policy is negative for the yen. Next is the pound. Again, look for this before Friday. Any pullback in this market, I would be looking for potential long opportunities into the previous high, up towards the 166.250 area. And the final yen pair is franc yen, and this is like the other two here. This is based on an unexpected strengthening of the yen. So if we get the market consolidating, say it does consolidate into Friday, and then we get a stronger yen, look for shorts in the Swiss franc versus the yen. Any pullback would be viewed. You can see this kind of pattern forming here. Somewhat of a head and shoulders, but also this kind of bear flag. If you get this move, look for the follow through down towards the 143 area. Again, these markets in blue are plan B setups. I do favor shorts in Aussie, CAD and the Japanese yen if we can get them catalyzed, to the short side on those interest rate decisions. Okay, so wrapping up the video with gold, silver and Bitcoin. And as you can see, the gold-silver ratio is still pushing to new highs. In fact, we have a breakout here with momentum. So I do favor silver shorts over and above gold shorts when we look down here at these two. And you can see also Bitcoin as well. So going into next week, one of the things members know I like to do is when we have lots of risk event in Forex, I do like to hide out in commodities a bit more. That means from trading dollar pairs, I would be looking New Zealand dollar, US dollar, yen, euro dollar. Potentially that may actually reverse to the downside, euro dollar, if Chair Powell gets hawkish, don't forget. But I like to, if I think we're going to see some strength in the dollar, I like to go into those commodities. So keep an eye out for these next week, especially to the downside on a more hawkish Chair Powell. And out of the two, silver is the one I like the most. Okay, so starting with gold, I do favor shorts in gold. We are getting a correction, which is fine because we're looking at this. Any pullback in this area is an opportunity to go short. And if we continue to pull back, I would be favoring shorts in this market down to the 1820 area. And this low over here is quite good. Why? Because even if this market is going to reverse, very often it would paint an inverse head and shoulders first, come down, test this area perhaps, and then rally. So either way, even in the event of a bigger reversal, which I do not think is coming, everything we looked at in the dollar suggests further strengthening. I think we're going to see gold lower this month. But just for argument's sake, even if you thought this was going to reverse, there's probably a good trade here down towards this area and this previous low, just on an inverse head and shoulders, were that to be the case. Next is silver, highlighted in gold because this is my favorite. Out of all these markets, this is one of my favorite short opportunities. And the probabilities in the commodity scorecards actually put silver as a much better short. And technically, this is also a better short because we have a correction here in a bear flag. So any continued pullback is simply viewed as an opportunity to look for shorts down to the 20.40 area. And in fact, this previous low would be a fantastic short-term target if you were short and we trade into this to start to look to book near-term profits. And last but not least, we have Bitcoin. Bitcoin, we're looking on the daily chart here, and I've been highlighting the fact that Bitcoin is most likely forming a near-term top, and in fact we did have a really strong sell-off. So I am still favoring shorts in Bitcoin. I've taken this off. This is not highlighted in gold. This would be probably highlighted in gold if not for the fact that Bitcoin has not been trading as well as it was previously, and I'm a little bit cautious about trading Bitcoin. It's got a lot of volatility, so I don't like it as much as these other markets. But if you are trading Bitcoin, I would be focused on those shorts, and any pullback in this market next week simply viewed as an opportunity to look for shorts into the 2050 area. Once we get to here, this is where I'd be looking, perhaps this low over here, to start to book profits on any short-term trades. So that is it for me for this week, guys. As always, I hope you enjoyed today's video, and if you did, why not consider joining us in the room each day where I go through these markets and the setups that I'm personally looking at with members on a daily basis for over 75 markets in different asset classes, including stocks, bonds, Forex, and commodities. So if you'd like to know more about the benefits of GMT membership, why not check out the link in the description below and in the pinned comment where you can get a 2-week free trial totally risk-free. So have a fantastic weekend. I'll see you all next week.